still ahead, sticking up for the little guy. This guy, I love this guy because he looks like, right? He looks like the old Buddy Epson. I love him, but he's still around. Dunkin' Brands Chairman Jon Luther tells us about keeping small businesses up and running. Squawk Box coming right back.
You can't get cherries, so
follow me. A report out suggests a bank lending shortfall could cost 94,000 jobs in the franchise industry this year. That's the finding from the International Franchise Association. It plans to address the issue at its annual meeting this week. Joining us now to discuss this and more is Jon Luther, non-executive chairman of the International Franchise Association, also non-executive chairman of both Dunkin' Brands and Arby's. Arby's restaurant. Really, I mean,
I'm sorry about that, Joe.
No, I mean, if just left to my own devices, I'd just stay back there. We had Sonic on last week.
Sure.
And one of the questions I asked was, it's $1 million for a Sonic franchise, I think.
Sure, to build the store out and franchise fees, et cetera, sure.
And during the height of the crisis, there was no funding for that, was there? Because it's a small, what is it, a small business loan?
Yeah, what happened was that the banks, with all the craziness going on in the recession, were holding back on lending, and the small business community got hurt the most. So we have a lot of demand for franchising because the formula for franchising is a very workable formula. It's been proven, it's been tested, so we have a very high success rate when you open a franchise store. And not just restaurants. We have lodging, we have services, you have retail, you have a lot of other franchises other than food that need to get capital to get started and grow. And during this crisis, the banks held back and the demand built. And so what we did through the IFA, the International Franchise Association, I'm their chairman this year, and this is our second annual Small Business Lending Summit. And with that, we're bringing bankers together with franchisors and some of the administration folks. Small Business Association, Karen Mills will be there. Marty Gruenberg from the FDIC will be there as an example. And we're bringing people together to educate how successful franchising is in this difficult market. And the banks are saying, and the education is now working and lending is freeing up. And Karen Mills has done a great job at the SBA, relaxing some of the rules there to make it easier to get the SBA loans, because approximately around 20% of all small business loans are through the SBA. So all this coming together in the summit later on today and tomorrow aids and abets the world of franchising, which is a great business model for the small businessman. Formula entrepreneurism, as it were.
Exactly. If we wanted to try to promote entrepreneurship, is there a better way than with franchises? And then people own 2, 3, 4. They could own an Arby's and a Dunkin' Donuts event.
Well, and there are a couple of folks that do that. There's a lot of multiple ownership. Some of them will build in a market, want to stay in that market, so they'll bring several other franchises under their infrastructure. It works out really well.
I would think, entrepreneurs, as you know, 3 out of 4 times they fail. But with an established brand, I would figure you sort of got better odds as a bank to do it, right?
8.5 to 9 out of 10 franchise stores succeed over time. It's because that formula, it's tested, it's proven. The franchisor provides great support. We select great franchisees who understand the brand. They understand all of that financing that goes on. They also know how to hire. We take care of good marketing. We really provide a support system and a lot of time. Like, for instance, Dunkin' and Arby's have been around over 50 years. It's a lot of work, a lot of experience making sure that our franchisees are successful.
Jon, we were chatting about this earlier. I don't know if you saw the piece in the Journal today that Wall Street has decided to start to securitize a lot of these franchise royalty fees and start selling those bonds to investors. In fact, Joe just mentioned Sonic. The article points out that Sonic, they're doing this for Sonic, they're doing this for Church's Chicken, they're doing this for Domino's. And there is some concern that you may be putting some good credit, package it together with bad credit. If I'm looking at a bond that's securitized by royalties of franchises, is that a good investment?
I would suggest to you to be very careful, as I tell everybody. Make sure that you look at the franchisor, you look at the strength of the business, you look at their recent performance. For instance, in 2006, when Dunkin' and our sponsors acquired the company, we did securitize that debt. And when it got went south in the 07, 08, 09 era, we refinanced into traditional lending. So today, I would suggest that everybody be very, very careful. But when you have strong brands like a Sonic, like a Domino's, like an Applebee's, I believe they're in some securitization as well, you probably have a pretty safe investment. But it's like everything else. You want to be careful about every single investment, especially during this economic period. There's so much uncertainty still left in the market. But it is an avenue of financing that has some value.
You know, John, there's been a lot of talk about Burger King and the troubles that it's facing right now. There was a Fortune magazine over the weekend had something that asked about whether it would be the equivalent of Sears with Eddie Lampert. And I just wonder, you look at Burger King, it's such a known franchise. It's so well known. It's so well loved.
It's not love.
I love it.
I don't.
I love it.
I don't like the char-grilled burgers, and they never got the fries down.
I love it.
Yeah.
It's totally product specific.
But to me, I can't believe that
you
a franchise.
like Burger King.
Yeah, I do.
See, there's Coke people.
But you know what it is I like their
people,
chicken
Burger King.
sandwiches.
Oh, you do?
Yeah, their chicken sandwiches are good. What happens to a franchise like Burger King that has been around for so long? How does it get into trouble like that?
Yeah, it's a great point. You know, it's like every period of time there's ups and downs. You got to look at the long history, I think, and I think Burger King has had that. They were strong for a while. In the last 3 years, they ran into tough times because of competitive set. Franchisees couldn't get financing, et cetera, could grow the brand. But they've just been acquired, and they've done some good work privately, and I believe they're coming out within 80 days with a public environment, or public offering. So there's probably hope for that brand, but it's a competitive world. And
you've got to re-energize Starbucks, too. But Dunkin' has certainly faced that challenge over the last 5 years.
Yeah, you know, I remember.
But the stock's back. Howard Schultz came back. He's done.
Yeah, he did a terrific job. You know, it's amazing. Back in 2003, the challenge when I became the CEO of Dunkin', and as we move forward, the challenge was, can you compete against Krispy Kreme? Can you compete against other coffee?
Right.
And we have such a strong brand, such strong loyalty at Dunkin' that we felt we could.
Well, I told you,
as you know, America runs on Dunkin'.
It does, and you know, every Saturday and Sunday I go see Sid and Springfield. You got to send him a plaque.
Sid. I'm going to make sure
he's got a place humming. By the time I get to the counter, my coffees are ready every Saturday.
And he's following you on Twitter now too.
Yeah,
and Sid is following me.
That's right.
All right, John. Thank you.
Yeah, thank you very much
Great
for having me. Good to see you all again.
Thanks, John.